Well, as Mercy alluded to there, inflation in the U.S. indeed accelerated in the month of September, with the cost of housing and other necessities intensifying pressure on households, wiping out pay gains, and ensuring that the Federal Reserve will keep raising interest rates aggressively. Now, core inflation, which is consumer prices excluding volatile food and energy costs, jumped 6.6% in September from a year ago, the fastest such pace in 4 decades. And on a month-to-month basis, core inflation also soared 0.6% for a second straight time, defying expectations for a slowdown and signaling that the Fed's multiple rate hikes have yet to ease inflation pressures. And meanwhile, overall consumer prices in the U.S. rose 8.2% in September compared with a year ago, down slightly from August. Now, although cheaper gas helped slow the broadest measure of inflation, the higher cost of food, medical care, and housing pointed to the breadth of price pressures across the U.S. economy. One economist from Deutsche Bank, Matthew Luisetti, said that there is still no evidence that inflation is slowing down. Now, the September inflation numbers essentially guarantee that the Fed will raise its key short-term rate by 3/4 of a point for a fourth straight time when it next meets in early November. The Fed has already raised its key short-term rate by 3 percentage points since March, the fastest pace of hikes since the early 80s. Welcome back. Well, Europe's energy crisis could potentially slash its car production by nearly 40% by the end of 2023, or more than 1 million vehicles. S&P Global Mobility and Auto Forecaster warned in a report called Winter is Coming, released earlier this week. The report said that the auto industry supply chain, already stretched thin by the COVID-19 pandemic and the Russia-Ukraine war, may face added extensive pressures in terms of hiking energy costs and perhaps even power cuts. And according to the report, the cost of producing cars in Europe has risen sharply, well above pre-energy crisis levels, and has put a strain on suppliers. All car makers will be impacted to a certain extent as European suppliers export parts across the globe. The quarterly production from Europe-based auto manufacturing plants was forecasted to stand between 4 million and 4.5 million units per quarter from the fourth quarter of 2022 through 2023. But with potential utility restrictions, that output could be cut as low as 2.75 to 3 million units per quarter.